Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today on the podcast, we have Jason Yarusi. Jason has acquired over 1,400 multifamily units since 2017, I believe, and is an avid ultra runner and workout enthusiast and hosts the Multifamily Live podcast. Jason, can you start by telling the listeners a little bit more about yourself and what you do?
Sure. So thanks for having me, Gary. My wife, Peely, and myself, we started Yarusi Holdings, a multifamily investment firm. As you mentioned, back in 2017, we've targeted mid and large apartment communities here in the Midwest and Southeast, typically looking for properties that are underperforming, whether it's on the property side or the management side.
Nice. And today we're going to talk about how to produce massive income with effective asset management. And so let's start when you start looking at a property, and you talked about finding value adds. What are the components that you're looking for to really boost that income?
Sure. So, coming from our background, Peely and we met in New York City running a lot of restaurants and bars, and even opened a brewery and sold a brewery at one time. But in terms of that, it was always looking at that business, right? So on a lot of restaurants, lots of times they're underperforming because they're not empowering the staff, or they have too many items on the menu, or they're not making good use of their resources for what they have, or using the space correctly. Same thing ties that when you go into multifamily investing, right? You're looking at this as a business, and why is the business underperforming? And the easiest thing to do is always go to the rent, right? So, let's just increase the rent. However, subjectively, right, you have people who are living there that you hope will be happy to live there and stay there. However, if you go in there with the sole intention, let me just push rent up, right, that's going to have a certain negative connotation on your property. So we're looking at ways of where is this underperforming to the market, right? And whether it be just on they're overextended in terms of their payroll, they're not marketing well. There's other inconsistencies here where maybe their insurance costs are too high, their contracts costs are too high because they haven't gone out there and marketed their contracts to know what the official rate is there. So we're looking at ways that we can match the neighboring properties and find, of course, the plug and pulls, right? So if they're not going out there having an acceptable application process, or not charging things like pet fees or late fees, or they're not sizing in a way where they're looking at your utilities, right? How can we scale back our utility cost, which can be a big carrier? Can we build back? But if we do build back, how does that affect also adding rent on there? So we've always done it on an outside-in approach, is that we want to go there first and make the narrative to the existing tenant base that we're here to improve the property. So we want them to want to live here and enjoy living here, and not treat this as a place that they're passing through. And what we found using that is that when we put this approach, we go out there, we clean up the landscape, change up the siding, whether it be to paint buildings or reside buildings or fix roofs or fix the parking lot, it makes a more welcoming place there. And then we make it clear to the existing tenant base that we want to fix things. We want things to run right, where they may have become accustomed to not calling the prior owner because they don't show up to fix things. We want the narrative to be that we will fix things. And we find with that people will start treating it like a place that they live and they want to live. And so with that we'll be able to cut down our utility bills or other points just based on fixing things, and then now implementing practices like changing out toilets, changing out faucets, aerators, other piece of the puzzle where we can substantially make the property perform better. And once we make the property perform better, be a better place to live, start having new, of course, leases come on, or new units rented at market rate, we can go back to the existing tenant base and say, listen, we are doing these improvements to the property, and with this, it warrants this increase in income going forward when they come up for the renewals.
I love how you started with you and Billy worked in bars and restaurants, and that created that foundation. I've been an entrepreneur my whole life before I got into real estate, and those transferable skills you're able to start running versus like walking and figuring stuff out. Worked with people, you've managed them, you've empowered them, and those are skill sets that it takes a while to learn, and it's cool to see that's where that was your foundation. And who knew then that you would be applying that to multifamily years later.
When you think about it, it is all right. So you have a perfect business plan, but then you're working with life too, right? You're working with people, whether it be on the people that are helping you building through your property managers or contractors, but also the tenant base, right? And so just understanding the narrative is that the perfect business plan is never able to be accomplished in a perfect perspective, right? Because day one happens, right? And so understanding where are our guardrails, where do we want to be, so how can you work to make this a great place for everybody to work at the same time?
Yeah, and getting back to the income opportunities. Yeah, when you look at a property, there's so many ways to boost income, and it's just knocking them down one by one by one, and then when you divide it by the cap rate, now you're talking $1,000 here, $1,000 there. You add it up over the course of the year, you divide it by a 4 cap or a 5 cap, and we're talking huge amounts of money that is adding value to that property.
Yeah, and that's actually very true, right? And so when you think we once change out a bunch of toilets and faucets and aerators on the property, right, and cut down the water bill by like 20-25%, and that accounted for hundreds of thousands of dollars of increase in value to the property, right? And so when you think about that, you're like, man, well, I've done something simple here that has a positive impact on the tenant base, and now the property's worth $300,000 or $400,000 more, right? It's not like when you're doing a flip, you're like, oh, I changed the toilet out, and now the property's worth another $100,000. So looking at that and just like, but that's business in a nutshell, yeah. Right? You can either focus on the income or you focus on the expenses. But thoroughly, when you do that, it has a large positive impact when it's across 50 units, 100 units, 200 units.
Yeah, that scalability is huge, and that's the beauty of this. Because I was looking at your bio before we started, and you previously worked on like 2,000 houses in like a small time frame. That's unbelievable that you were working on so many houses at one time. And now, I have to assume your life got so much easier by moving to multifamily.
When you focus on one area at one stance, you can do a lot, right? Sometimes and it's like that's a good basically statement for life is that sometimes we want to like have a million things going on at once, but you find when you go deep in one perspective, you get the most focused and most clarity and most completed, right? And so we look at the point for these 2,000 houses, we were actually doing a lot of flood zone work and helping people get back in their homes after Hurricane Sandy. And so my family still has a house lifting business. And what was true about this house lifting business is that no one really raises their house twice, right? This is a one-time thing. And so each and every time you have to understand that this is, no matter if I said this 1,000, 10,000, 20,000 times, this is the first time basically they're upon us to have this happen to them, right? And so understanding that we'll call it Groundhog's Day, but it's information that has to be portrayed or put out to people in that first point because it's massive important. It's their biggest investment, right? So when you try and do that, there's no way to really make that fluent, right? Because each time is that first time for someone, right? And so that experience is always a new experience. And so you limit yourself on how much you can do because you're constantly needed, right? Which is great. We were happy to help, but here with multifamily, you're able to accomplish a lot within one contained space by making small lever changes to how the property is actually operating.
You had mentioned the massive growth on the income side, and obviously expenses. It's really hard to cut expenses. Certainly on the utility stuff, but are there other things? Are you looking for to really boost the income line at the end of the day? Besides what you mentioned, and do you have incentives that you do for your team to really get them hyper focused on this?
Yeah, so honestly, for that point, it just depends on the property, right? So we may have a big leasing incentive, a big narrative here for occupancy based on where the property starts and where it falls, right? The best part here is that you can look at a lot of ways to cut and curve, but the one you really need to control is your time. And so we tried to get we'll call it a kit built out to what our turns are going to be, because if we can be very streamlined on what our turns are, then of course the process goes quicker. Right? Because typically if you say, oh, a unit's come vacant, oh, can you go out there and see what needs to be done? And then they're going to send you a quote. And then by the time you get that back, you may not want to do things or do things. And now you're losing 3-4 weeks in the timeline by the time you're even getting units started. But if you have a clear narrative of how you want to turn this unit day one, that the second it happens, it can be in process because you now have the kit prepared for that unit. Think about how much time you've just saved, right? Now, if you can do this, it's going to be predictable on what the unit will look like. So also your marketing can be well built in, right? So if you think 100 units here, and instead of it taking 5 or 6 weeks for you to have a unit turned and marketed and leased and moved in, well, what if you can take those 100 units and cut down 2 weeks back on all of those units, right? So say if you're going to turn 50, 60 units a year, well, if you can get 2 weeks back, which say a unit's $1,000, you're basically getting $500 more income pushed up to you, right? So time is your biggest enemy here, and being really predictable with your process that can help you eliminate that time gap.
Yeah, I love that. That's so important. We're always looking to reduce timelines, and just having it systemized. It might cost you a little bit more in money, but in time you'll more than make up for it. So well worth it. Really love that. We asked this question of all of our guests: what is your asset management superpower?
I think being stubbornly consistent, right, and stubbornly persistent at the same time is that if I believe it can be accomplished, I'm not going to set out and take a no. I'm going to look for ways that I can empower others or find the solution or find the right question. And usually it's that I'm not asking the right question. And as soon as I can figure out the right question, I can get our team and ourselves to the best answer to push the property forward.
I love it. I love it. Please tell the listeners where they can find out more about you, Jason.
Sure. So go over to yarusiholdings.com, YARUSI holdings.com.
Thank you so much for coming on, talking about how to produce massive income. Really appreciate it. Gary Lipsky signing off. I'll be back next week with another informative episode of the Real Estate Asset Management Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and review this podcast, as it will help us grow our audience and reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website, breakofdaycapital.com, and sign up for our newsletter and or fill out our investor application. We'll talk to you next week.